Welcome back everyone to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, it's been a very weak session. We are plumbing the day's lows as we speak, and if you look at the Nifty and Sensex, they're extended the losses we saw earlier in the day, largely because of the global chaos that we are, at this point of time being subjected to. The late trigger that has come, or the late sell-off that has come after the European markets open, because Credit Suisse shares, we talked about it earlier in the morning, they have now fallen to new fresh record lows. Santo, they were down about 8.5 to 10% before we came online. And if you look at the credit default swaps that Santo was talking about earlier in the morning, they have now touched at a record high level. So clearly there is fear now in the market that that bank could be under pressure, solvency pressure going ahead. But the good part is that the small cap and the mid cap space is holding off still quite well. The selling pressure there seems to be a little less intense, Santo, than what we are seeing in the large cap at this point of time.
Well, there's just one reason for that, CJ. The simple reason probably there is that everybody still seems to be holding on to the theory that no matter what happens globally, India will continue to outperform everyone else. So that probably could be, as you've heard of the saying, CJ, what's that, where angels fear to tread.
Oh, well, Santo, I think that theory may be probably valid in the initial stages of any sort of a credit event globally, but as 2008 was evidence that when something, a credit event like that happens, then nobody is spared, no matter whether you're India or you're China.
So you're seeing a lot of this buy on dip strategy even now where the second line shares are concerned, and probably that could be the only reason why these stocks have managed to hold firm.
Also a lot of cash on the sidelines also.
I think
domestic investors were largely net sellers over the past 2 months.
All the stocks look very attractive compared to the prices 2 weeks back.
Yeah.
So if you're getting something for 8-9% lower, I think everyone feels this is a great bargain and just jumping in there.
That is true, Santo.
So I think from the look of it and from what most technical analysts are saying, maybe this Nifty could get support around 16,800. At least that's a chatter on the street. Whether the index will hold that level is another matter altogether. Today itself, it's now just
I think closing in on 16,850 at this point of time. I think, Santo, this is something that even portfolio managers I was speaking to in the market, they seemed quite confident that the 15,200 level that we had touched back in June, mid-June, that probably is the bottom now for the time being, and it is very unlikely that the market goes below that level. On the other hand, if you look at the speculators out there, they are now in the rush to book profits as much as possible. They are a little worried that probably the market is headed much lower than where it is.
Couple of things here, CJ. One is also the margin calls which would be coming in because of the continuous fall in stock prices. Many of these HNIs would also have exposure to frontline stocks.
Yeah.
So that's one reason. And secondly, the cost of holding your positions is also fairly high. And thirdly, when traders don't try to fight the trend, if they feel that something is on the way down, probably they'll sell, cash out for the time being, and probably get in at a lower level when they see that maybe the situation is somewhat better. So all these factors probably could explain why you're seeing so much of volatility.
I mean, if you're a momentum trader, clearly the party never ends for you, depending how well you can sustain yourself in a market like this. That said, a lot of stocks were buzzing, individual stocks were buzzing in trade today, especially the first name from the hotel space.
Lemon Tree Hotels and CJ have been very bullish on the hospitality sector, and for good reason. The stocks have done very well. Immediate trigger being the resumption of travel, both corporate as well as business. This is something even aviation companies have testified to. They are seeing a big pickup in business travels, and with Lemon Tree, 86% of its properties are located largely in business destinations. So when lockdown struck, this hotel chain took a beating for the same reason, because business travel dropped very sharply. And now that things are turning around a bit, Lemon Tree is well placed to kind of benefit from that trend. And also its biggest property till date, which is Aurika, which is about which has 669 room property in Mumbai. That will be opened by the end of this fiscal. So that is expected to give a big jump to overall revenues in the years ahead. Besides, the company has also said that it is planning to repay its debt over the next 4 to 5 years. Motilal Oswal and Anand Rathi are among the brokerages which are fairly bullish on this stock.
Well, Santo, I think probably yes, the hotel industry, the travel and leisure industry has enjoyed a significant pent-up demand ever since the Omicron wave clearly ended, and I think it has continued for the past 5-6 months now. But going ahead, it just seems to me that it's too ambitious maybe to expect that demand to continue at the same level and pace for the next 2 to 3 years in the way that the market is extrapolating if you look at the stock price of some of these hotel chains. But in particular, if you look at Lemon Tree, Santo, for all the enthusiasm, on a technical level, the stock is not really, exhibiting that much strength at this point. It seems to be in a consolidation mode, probably. Apart from that, the only concern now would be if international travel does not pick up because of a possible global slowdown. People work banking a lot on international travel to probably come back, and then that could be the second, leg of pent-up demand. But if that does not come back in the way that market was expecting, then I could probably sense a little bit of derating on these counters, probably in the short term at least, if not in the long term, Santo.
Well, the stock has done decently, I would say, CJ. Last 3-4 months, it's risen about 50%.
No, true. I'm talking about the short term technical. I think it seems like because of the overall market weakness also, I think the stock has cooled off a little bit, which is always never a bad thing. You always want a certain bit of cooling off period in a long term trend, but provided that it is a long term trend in this case. Well, the first stock on my radar today is La Opala RG, and this is another stock that has done quite well recently on the hope that the festival season will clearly be a very big trigger for revenues of the company. If you watch the past 4 quarters sequentially, there has been clearly a turnaround happening in this company after almost 3 to 4 years of general underperformance from the company. The festive demand, especially in September and October, seems to be pretty strong. If some of the analysts who cover the stock, according to them, the channel checks are indicating that demand is quite strong for kitchenware and all those sort of products at this point of time, and therefore the Q2 and Q3 earnings of the company could be pretty good going ahead. Apart from that, one of the major triggers for why the performance has turned around for La Opala is the fact that the management has been investing very heavily, Santo, in ramping up its distribution network. That seems to be a game changer, and I think if that strategy continues going ahead, clearly La Opala sees itself having a very long runway as far as market share and revenue growth is concerned going ahead. If you look at what Nirmal Bang Equities, which has has a coverage on the stock, they believe that the company could easily compound its earnings or earnings per share at the rate of about 26% annually for the next 2 to 3 years. So clearly, one stock that the market is quite bullish on, and even the analyst community is looking forward to see prosper.
Well, CJ, I have a slightly different take on the earnings growth over the past 4 or 5 quarters. They've been pretty much range bound somewhere in the region of between 80 crore to about 100 odd crore. It's not really broken out in that. It's been quite consistent, but consistent.
But also COVID was also, and the economic slowdown prior to COVID COVID was also.
I knew you would say that,
but when
I look at the 2019 September quarter or December, the festive season sales for that matter, and even in the COVID year, there was not much of a difference there. It did as well or as bad as the previous years. Now, overall, given that in the last 5 years, you've just seen about a 7% compounded growth in earnings, even after adjusting for, let's say, COVID related year. Even in the last 10 years, the compounded growth rate has been just about 11%. And now you're valuing the stock fairly richly, I would say, at 25-30 times forward earnings. So the stock looks a little expensive given that the model has so far not shown to be really.
No, Santo, I think there has been a change in strategy over the past 4 to 5 quarters, especially post-COVID. The management has realized that it needs to invest quite rapidly in its distribution network, because that is where they were lagging behind some of the other peers, such as even Borosil as well. Where you look at the Borosil stock price movement, I think probably it has outperformed La Opala, largely because of course there is optimism for kitchenware segment at that point of time because of stay at home, work from home, and there was generally a bigger demand. But I think that demand seems to have sustained even after COVID.
Well, next stock on my watch list is Indraprastha Gas. I've been fairly bullish on gas distribution companies, but in this case, I guess there is a bit reason for caution.
I feel like this is my I told you so moment, Santo.
But you will be arguing against me nevertheless. So, so with gas companies now, generally it was felt, at least when the decision initially was deferred to hike gas prices, it was felt that probably this could continue for some time, but that's not been the case. And Friday,
and thankfully so, I think it's good on the part of the government to continue with the processes that have been laid out, and not changing them for short-term reasons.
Now, according to Antique Broking, Indraprastha Gas seems to be among the city gas distribution companies which would be most likely hurt in a least position to be able to pass on higher prices to its consumers. Now, generally the view so far has been that with city gas distribution company, considering that they cater to the retail consumers, both if you look at pipe gas, residential pipe gas as well as fuel, they are in a better position to pass on hikes, but that does not necessarily seem to be the case. And according to Antique, the hit to the company's earnings for this year could be quite significant. In fact, it sees the hit to margins coming from the second half of this year. There could be some recovery in FY24, but that's still some time away. In the short term, there's definitely pain for Indraprastha Gas Limited, and you're also seeing probably the negative sentiment on the stock through the huge buildup of short positions in Indraprastha Gas futures.
And Santo clearly, I think, is totally justified the correction that the stock is seeing, because at one point of time the market became too confident that the margin levels that the company had exhibited in Q1 and Q4 are just going to sustain into FY24, and therefore there will be no risk from any sort of price hike in natural gas prices. If you look at the past 6 months, Santo, in just past 6 months alone, natural gas prices have risen 100% in India alone. I mean, we are not even talking about the global markets. And if you look at the global scenario now after this hike, we have still yet to see the winter, the dreaded winter in Europe come, when natural gas supplies are expected to fall even more and prices are expected to surge even higher. So come of April, the situation could get even worse for Indraprastha Gas, in my opinion. That is why I was warning earlier as well, that all this enthusiasm that margins will sustain, the company is seeing very strong demand and therefore it will be able to pass on those costs. I think it's clear now that that probably was not sustainable going ahead, and I think this is one stock that probably will remain under pressure for the time being. Well, the next stock on my radar today, of course from the commodity space today, is Coal India. The stock is holding up quite well even in a market like today, and that's largely because of the fact that it's gotten a very strong support at the 210 to 215 level, Santo. It seems, yes, it's struggling to break above that and reach that IPO price, that long forgotten IPO price of 245 that everybody has been waiting for. But clearly at this point of time, it seems that the selling pressure is not beyond the 210, 215 level, which is a good support base for the stock. Apart from that, if you look at the production numbers that came out over the weekend, clearly 20% growth in production in the first half of FY23, which really augurs well for earnings and revenue growth going ahead, given the fact that coal prices in general are trending higher at this point of time. Apart from that, the company continues to enjoy very, very good e-auction pricing, or premiums in the secondary sales that it makes, apart from the primary sales that it makes to power sector and other industries. So overall, Santo, with the strong earnings picture, with the strong visibility in earnings, and with the uncertainty that we are seeing in the market, I think Coal India, I mean, it's a little counterintuitive to say it, but seems like a good defensive bet.
Well, I don't know how you can call it a defensive bet. So despite the sharp increase in coal prices, CJ, the stock price hasn't done much.
But it's still done better than the rest.
Over the last 1 year.
I think relative is all we are looking for, right?
After the steep increase in coal prices, you're still getting the stock at the same price that it was quoting 3 years back. So that should tell you something. The biggest challenge here with Coal India, as the chairman of the company also said in an analyst meet recently, is that it's finding it very difficult to hike prices. So coal prices may be going anywhere, but if the company really can't hike prices, then how much are you going to reap out of that? Now wage prices are going to go up, right? They're going to have higher salary bills. Now the company has said that how it intends to grow its earnings is by producing more and controlling costs. But that is not really going to get investors excited, right? When there is money out there to be made, the inability of the company to make full use of that is one reason why the
Santo,
stock...
being a PSU, I don't think that will ever be done.
That's
so
the
I
whole
think
thing.
And that is why I'm saying this is even more impressive, given the fact that having the PSU tag and having that PSU, problems that every PSU faces in these sort of market conditions, it has still been able to perform this well. I think is a testament to the fact that the management has been able to navigate this situation quite well.
I would say that it will always remain a tactical bet. There will be a time
possibly.
when it becomes
and
undervalued.
Hence my tag of defensive probably, because it's tactical in that sense.
Well, okay, I take that. Last stock on a watch list is Ashok Leyland. The stock is under pressure. However,
surprisingly
the September quarter numbers were quite good. Overall, 88% increase jump, which is a fairly good number considering
even
that.
if you look at month on month, it was pretty good.
Pretty good, and yet at least the market doesn't seem to be quite impressed. At least that's what the stock price seems to be indicating at this point in time. Motilal Oswal and Sher Khan are among the brokerages which are positive on Ashok Leyland. Now, on the CV space as a whole, the general outlook is quite positive, and Ashok Leyland has clearly outperformed its peers, and that is giving confidence to some of the analysts that probably the company may be able to regain its market share.
Well, Santo, I'm a little worried for Ashok Leyland as far as the near term is concerned, because if you look at the stock price, the stock has really now slipped below its 50-day moving average, which is, if you're a momentum trader, is never, I mean a bullish momentum trader, clearly it's not a very good sign for you, because it clearly is indicating that momentum is weakening in the short term for the stock. Apart from that, I think it'll be very critical to monitor, Santo, if the sales momentum in the CV space sustains beyond November, because the first half of FY23 clearly has been aided by pent-up demand. A lot of logistic companies which had to replenish their fleet, they could not do it because of the COVID scenario. They were doing it over the course of the past 6 to 12 months. When that pent-up demand goes away, whether this sales momentum will sustain heading into March, I think is something that we'll have to watch out for, and it will be an evolving conversation that we'll have on Ashok Leyland. Apart from that, maybe one of the reasons why sentiment has gotten a little patchy, Santo, is the fact that because of that entire talk about global slowdown, I think when we have a global slowdown, it is very natural to expect that the Indian economy will also slow down along with it, and generally CV market does not do well in a slowing economy. So I think probably some bit of tentativeness and cautiousness, bleeding in to Ashok Leyland at this point of time.
Well, let's take a quick look at the market, and no respite for the bulls, I would say, CJ. Sensex still down about 620 odd points, and the Nifty is down a little over 200 points. Mid-cap stocks somehow are faring slightly better than the frontline stock, but I gave the reasons for that.
Yeah, absolutely. And Santo, if you look at some of the top losers at this point of time in the market, among the top gainers actually is defense name, your defense name, Cochin Shipyard. But top losers clearly today, Suzlon Energy in the Nifty 500. Adani stocks are really taking a hammering at this point of time. Vijay Diagnostic and India Cements, another stock which move up on news, and I think has been move up on rumors basically, and now is seeing selling once the news has come out. So I think a very, very tepid day, very, very weak market, and very interesting to see how we shape up for tomorrow morning.
And what are the things that we need to keep an eye out for, CJ?
Well, Santo, the first off will be, of course, the Fed's closed door meeting, a very surprise emergency closed door meeting that has been announced by the Fed that will be taking place today. So it'll be interesting to see what the outcome of that closed door meeting is. Remember the background in which it is coming. Bank of England has been monitoring Credit Suisse, apparently. That is the reportage coming out of Europe. Swiss National Bank is monitoring the situation with Credit Suisse, and also the run on the UK pension funds last week. So clearly, financial stability risks are at the topmost now for central bankers, and it will be interesting to see what the outcome there is. Apart from that, watch out for US manufacturing data for the month of September. That will be very important from rate hike perspective. And also tomorrow, ECB's chief Christine Lagarde will be speaking. So her speech becomes very critical in the current situation. And apart from that, the US jobs openings data that will come tomorrow.
Well, thanks, CJ. And with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.